reforms put in place under President Obama's health care plan is one that directly affects business. Corporations will no longer be able to claim both a 28% subsidy and a 28% tax deduction for retiree prescription drugs. Instead, they will continue to receive just the subsidy and will have to take a write-down reflecting the loss of future tax deductions. Commerce Secretary Gary Locke argues corporations have overhyped the issue and says the actual impact on the bottom line will be minimal. Is that the case? We break it down right now with Jim Klein, President of the American Benefits Council, and Christian Dorsey, Director of External and Government Affairs at the Economic Policy Institute. Gentlemen, it is good to have you on the program.
Thank you very much.
So,
Thanks,
James,
Maria.
kick us off here. Your comments or commentary on Secretary Locke's characterization.
Yeah, I really don't think that it was appropriate. Certainly companies are by no means trying to use their representations about this one provision as a proxy for their views on the entire health care bill. The report of their present value of the future tax liability is something they're required to do under rules enforced by the Securities and Exchange Commission. And, you know, it is what it is. And the fact of the matter is that it's there. It's got to be reflected on the books. And Congress back in 2003 established this subsidy on a bipartisan basis. They treated it in a very peculiar way from a tax perspective, but it was done specifically in order to save the federal government money. That's what the subsidy is there for. It never was a windfall for employers. Certainly employers are happy to get it, but it was all established in order to encourage companies to continue sponsoring drug coverage for their retirees rather than having those retirees move to the Medicare program, which will cost the federal government more money. So
you think that there was a mischaracterization of that then?
Absolutely. The comment was that somehow companies were premature in terms of reporting these tax liabilities, or they should have waited for regulations to come out. There are no regulations that are going to be issued on this issue. It's not premature. As we all know, companies have to reflect those liabilities right away. They certainly need to do it before they report their first quarter earnings, and so that's why we saw a lot of these announcements being made during the last week of March.
So, Christian, what about you? Can you explain the background on this tax provision?
Sure. Well, you know, Maria, Jim is right on the essential facts, but let's take a look at exactly what that means. Profit-making corporations were allowed to receive a double subsidy, not only receiving direct money from taxpayers to subsidize retirees' prescription drug costs, but then the ability to deduct that very same amount from their corporate income tax. It's an unprecedented double subsidy that I'm sure would fly in the face of all that Americans believe about subsidizing corporate America. So what the health care bill is doing is simply removing one element of the double subsidy. By no means is this designed to hurt corporate America, but to make a level playing field.
Well,
and my issue here, Maria, is that the story has become about these very large numbers, the billion-dollar write-off in the case of AT&T. What has gone unreported is that its effect on cash flow is quite minimal, somewhere on the magnitude of less than 0.5%. That's the true financial impact of all this.
Well, yeah, I mean, the numbers are mind-boggling. Even the number, I mean, $940 billion is what it costs, right, over a decade. That's all the numbers are mind-boggling. Well, let me get your take on then why companies are feeling like this is going to be a higher expense for them. You know, I mean, you've got people wondering why they are going to see higher expenses and as a result not hire any new workers. At the end of the day, what do we want? We want new job creation, right?
You know, companies have not complained about this provision, not even about the tax that has to be paid over a period of years. What I think companies are reacting to is the suggestions that have been made that somehow their announcement of these accounting charges was politically motivated to embarrass the White House immediately in the aftermath of the enactment of health care reform. And it's nothing of the sort. This is required under the Securities and Exchange Commission. So nobody's complaining about it. I agree with Christian that the way that Congress set it up on a bipartisan basis back in 2003 was very peculiar. But it's important to note that it was done specifically in order to serve Congress's own unusual accounting methods. They could have very easily given a larger subsidy and made it taxable for their own purposes. They chose to make it a smaller subsidy and make it non-taxable. And if they had done it the other way, we wouldn't even be having this conversation today.
Well, Christian, let me ask you about those tax breaks, because I was on with somebody just the other day, and he said to me, look, Maria, stop saying tax breaks. It's really not a tax break for anybody, because in order to even get a tax break, as you call it, you have to pay for the insurance. You have to pay to be in the plan. So is that really a tax break, or is that a fee?
Well, it's not. It is a tax break, Maria. These were benefits that they were providing their retirees already. The government didn't force them to do it. It's part of the wages and benefits package that employers gave employees through bargaining. And simply because they were providing that benefit already doesn't mean that corporations are the paragons of virtue. They received a hefty subsidy from taxpayers to do what they were doing already. And now that the federal government is taking control of Medicare spending to make it affordable overall, it's deciding that it's not going to continue to subsidize corporations, private corporations, to do what it can do more efficiently.
Got it. All right. Well, I think also you make a good point, James. It's not necessarily that people are complaining, but it's a rule, the SEC's rule, that they actually have to come out and discuss what the expenses are looking like in any write-offs. Gentlemen, thank you very much. Great conversation. We appreciate your time tonight.
Thank you so much.
We'll see you soon.